All right, guys. Good morning or good afternoon, I should say. Let me get. All right, so the stream should be going well. We switched to a wired connection. Let me know if everything's working smoothly here, chat. Yeah, so Meta currently, hit 600s not that long ago. This earlier this morning in pre-market hit 600s, all the way back down now to 590s. Let's get some music rolling here. You can see Meta. We got quarter three. We got Microsoft also dropping today too. All right, good. Sound good? Good. Remember, nothing here should be taken as financial advice, and we are not liable for losses. Nothing here is forward looking. Always make your own assessment and do your own due diligence. Right, chat. Always do your own assessment, do your own due diligence. Understand CFTC 4.41. So Meta drops their earnings today. So we got Microsoft coming too with the numbers. Put this all down here. We got Meta earnings. We got Microsoft earnings going live later. So looking at these numbers here, chat. Drink my tea. I got too many things going on my computer right now. All right, let me drink my tea. So today, Meta is the big one you want to watch for, really. Healthcare technology. Supermicro had some pretty red action today. We got Microsoft earnings later on too. But yeah, Meta. Yeah, so Meta is expecting 541 a share. Or no, that was. Yeah, so Meta is expecting 541 a share on revenue of 40.14 billion. Let me make sure this is what we're expecting. What are y'all showing for expectations? Yeah, there we go. So Meta, it always struggles to keep it. There we go. So yeah, Meta is expecting 519 a share on 40.14 billion in revenue. It drops about 5 minutes after the bell. Microsoft drops at 410. Again, 519 EPS on revenue of 40.14. Microsoft also releases post bell and is expecting 308 EPS on revenue of 64.43. Put that number up. We'll put my. That's probably a better way to look at it. Meta currently just under $600. Microsoft at 430s. Let's take a look at their graphs. So here's Meta's EPS graph. right? So this is EPS. EPS is earnings per share. It's margins. So this is a history of Meta's margins. Okay, so one of the things that you see is that Meta has a pretty strong history of margins. You know, they slowed down in this period here, but the last, you know, solid year straight, year and a quarter, 5 quarters have been very strong. You can kind of see that reflected 1, 2, 3, 4, 5. And today, again, they were expecting for EPS at $5.19 a share. And so looking at their history, you know, they're expecting this one to show up about right here. If it comes in as expected, you know, that's a big if, but if it comes in as expected, the next graph will look like about that right there. And so again, let me know what you guys think about that. That's what we're looking like right now for Meta. Again, that's what we're looking like for Meta. We could also look at their revenue. But so that is Meta. Let's take a look at Microsoft, just because Microsoft's also releasing post-Bell this afternoon. Microsoft margins look good. Microsoft, you know, much better margins, I would say. You know, the big story of the day in tech is Supermicro Semiconductors and their downfall. You know, they need to redo this site. The problem with this site is that it doesn't let me look back easily. But Microsoft, very strong margins here, of course, as well. Like, look at this. So they've been pumping up for the last 5 years straight. Pretty green, pretty nice little trend. Growth has been solid for Microsoft, and if we come in as expected today, we're going to show up at 308. If we come in as expected, relative to the last few, 308 will be the, if we come in as expected today, Microsoft will have its strongest EPS ever if we show up as expected. So their last strongest expected number was 299. They're expecting 308 today. So if we come in as expected, that number will be over 3 here, and pretty strong looking trend or graph. Now, I'm not saying that's going to happen. I don't know. Let's take a look at revenue. Again, let's take a look at revenue. All right, so we're taking a look at revenue. EPS is margins. Revenue is kind of like potential. So they are expecting 14.14 for Meta. If Meta comes in as expected for revenue, they're going to have their highest revenue quarter ever about right here. If they come in as expected. So if they come in as expected, they'll have their largest revenue quarter ever about right there. Again, I'm not saying they're going to, but that's a big if. If they come in as expected, that's what it's going to look like. You know, we also got to take a look at Microsoft as well here. Let's see if we can find the same thing. Macro trends. Okay, so here, that's net income. Okay, so here's Meta. Let's just search for Microsoft up here. Do they not have Microsoft's revenue graph? Why not? That's weird. Here. Okay, yeah, there it is. Okay, so if Microsoft shows up as expected, they're expecting 64.43. So it won't be Microsoft's largest revenue quarter ever if they hit it. It'll be about just under this previous one, about right here, if they show up as expected. So again, we'll see what we're looking like. That's what the story is today. Revenue-wise, Meta could have its largest revenue quarter ever. Microsoft could have its largest EPS quarter ever. And again, time will tell. We'll see what happens there. All right, so yeah, look at Microsoft pop. Meta at 595. So Meta's quarter 3 earnings report set for release after close today. Big attention being paid attention to it, especially around revenue growth, advertising performance, and Meta's strategic AI investments. Analysts are anticipating a revenue increase of almost 18% year over year to approximately 40.3 billion. That'll be their largest revenue quarter ever if they hit it, with projected earnings per share around 523, up from 439 last year. This would mark Meta's 9th consecutive quarter exceeding revenue estimates, reflecting its robust position in the digital advertising space, driven heavily by AI-enhanced ad targeting and increasing ad spend across platforms. So a key thing to watch, though, in Meta's report is its advertising revenue, which has shown consistent gains due to AI-driven optimization and increased ad pricing, outperforming other competitors. Meta is expected to maintain its growth advantage over Google, with a projected ad revenue increase of about 17.1% compared to 9.7%. This quarter is also likely to show improvements in ad impression rates and the average price per ad, driven by an uptick in demand, especially with U.S. elections coming out. It could bolster, specific political spending. What Meta's doing for AI, I know Meta, the last time I really looked at it was their Llama series. So yeah, Meta's AI initiatives are another focal point. The Llama series of large language model LLMs and the potential development of internal search engine. The company's reported plans for an in-house search engine aimed at reducing dependence on external tech, like others, are expected to be a central topic in today's call, with Llama 4 set for release in 25. Investors are eager to update on how AI investments are expected to translate into revenue and bolster Meta's ecosystem of apps and services. So the Reality Labs division, which includes Meta's virtual reality and metaverse projects, remains an area of concern due to a lot of losses. So their metaverse projects, a lot of people are going to be magnifying into that, with potential, fears growing in that space for their company. Again, high operating losses. This segment incurred a $4.5 billion loss last quarter, 20% year-over-year increase in losses. Despite this, Meta's doubled down on the metaverse and AI, with 2024 capital expenditures estimated to be between 37 and 40 billion. Investors are looking for guidance on future spending plans, especially for 25. Meta expects further scale AI and product developments. So yeah, this is gonna be a big call. We'll see what happens. There's scale AI and product development. Yeah, so again, this is going to be a big call. We'll see what we get. Hey, John, the rate cut on the 7th of November will be good for markets, in your opinion? I don't know. Genuinely, no idea. Are you bullish or bearish on today's Meta earnings report? Bull, bear? Let me know what you guys think. Are you bullish or bearish? Vote on the poll. Let me know how you feel. Even though Meta will be up 6%. Well, Meta's already down leading into this report. If we take a look at a longer term chart from Meta here. All right, so here is a 10-minute chart. So leading into this report, you can kind of see the trend that we're showing here, where we dipped a little bit, we started to rebound, we kind of recently broke a little cup and handle breakout type patterns, and now we're falling back down today. And so this is where we are now on Meta's 15-minute trend. If we look at a longer term version of this, so if we zoom out a little bit more here, here's an hourly chart. So Meta, still a pretty nice upward trend for Meta. Like if I draw a graph here, and Meta's, there was a time when Meta was under $100 a share. Meta was under $100 a share a few years ago. They lost $10 billion in the metaverse. People were skeptical. Facebook was losing users, and everybody was fearing Meta's failure. But Meta ended up having one of the strongest rebounds any stock has done in the last 5 years, right? Meta was at under $100 a share in 2022. Under $100 a share. If I zoom out all the way back to that focal point, look at this here. So I'll put a weekly chart up so you guys can see it. Meta, again, let's see when the exact date is. Meta right here in October of 2022, not that long ago, was under $100 a share. It got down to like $95, $90 a share. And honestly, to be completely real, I was pretty skeptical of this company at that period of time. I thought it was really risky. I think that, a lot of people were moving away from Facebook, and that's like my generation's thing is Facebook. A lot of people moving away from that, and I just thought it looked really, really risky. But they proved a lot of people wrong, rebounded huge. And so we'll see what happens. It's a fun thing to watch. They've done really well. AI has helped them out. Their problem, one of the things that I think the metaverse is still a pretty risky bet. Virtual reality is great. Creating worlds in the metaverse is risky, right? I think there's too many metaverses. I think, you're selling land. There's a bubble. The easiest way to put it is there was a bubble in the metaverse. And I still think we're a long ways out. I think virtual reality is good, but I think Meta went too big too fast on virtual reality, where really AI is the future. And I think that's kind of where they're pivoting now with their Llama series. They're pivoting to more AI-based, AI-focused. And I think that makes sense, right? And so if I'm Meta, I'm putting a lot of it on AI. I'm pivoting to AI for sure. And Meta was so convinced about the metaverse that they changed their name. It used to be Facebook. Now they're Meta, right? They were so convinced in the metaverse potential and hype that they changed their name. Now, the AI situation, I think, is the bigger situation here. I think it's the future. It's much more predictably the future. And now maybe that will also include the metaverse. But again, it's I just hope they don't waste too much time in the metaverse, if that makes sense. But Meta did it. Yeah, they came back. Yeah, they showed the $10 billion loss from the metaverse, and they just crashed down. They looked really weak. I wish I would have bought it back then in hindsight, of course, but everyone coming out with their own AI, well, I think that's going to breed efficiency, which is good. It's good. Reddit, guys. Look at Reddit today, man. Reddit's just doing things today, man. Wow. Crazy. And again, I mean, you can kind of see this little dip. Let me see if I can find where Meta started to struggle. I got too many windows up here on this computer. I need to exit out of a lot of stuff. Got that. Got this. Cut that. I got the Fed rate. What did the Fed rate do? I see it at 94.5% right now. So here's the Fed's rate, still at 94.5%. Interesting. We'll see what happens there for the rate decision. Also, Roku, we were looking at that earlier. Let's cut that. We also, of course, got to pay attention to Microsoft earnings today. That'll be big. Here's another rate decision. AMD. Is AMD still down? I know AMD really, really struggled. Yeah, AMD still under 150. Looks weak. I'm surprised NVIDIA hasn't fallen more with it. So, alright, well. Got some treasury bill updates. Disney announced 10-year global deal for the Grammys to be exclusively simulcast on ABC, Hulu, and Disney Plus up to 2027. So a 10-year deal for the Grammys to be on Disney products. Interesting. Yeah. So all right, so Meta is indeed pushing towards its metaverse projects, though public interest and financial prospects for the space have cooled somewhat since the initial hype. Despite the industry's struggles, Meta remains invested in developing virtual and augmented reality technologies with an eye towards long-term potential. It reflects CEO Mark Z's belief that the metaverse will ultimately become a central point and part of daily social and work interactions, although the time frame for mainstream adoption appears longer than initially projected. One major focus is Meta's Reality Labs division. It manages the company's VR and AR initiatives, while Reality Labs posted a big old loss of $4.5 billion in Q2 for 2024. Meta's still seeing this investment as foundational, though, for future immersive experiences. It's working on developing the next-gen AR and VR headsets and glasses, along with the Horizon Worlds platform, which is a virtual social space aimed at consumers and businesses. Meta's still emphasizing, though, that technologies will evolve gradually, and so we're just in the beginning, and they remain essential to Zuckerberg's vision of a connected metaverse where people work, interact, and experience entertainment in new and different ways. Meta did acknowledge that the current financial challenges in the metaverse industry, signaling that while the path to profitability is still uncertain, it's committed to laying the groundwork now to capture market share when VR and AR tech matures. So basically what they're saying here is that they know the technology is not quite there to do what they want to do with it. But they're positioning themselves now, even if that means taking a couple billy losses in losses per year, per quarter sometimes, that they're positioning themselves to be on the forefront of this technology, and eventually it is going to evolve and be better and better and better, and they're building that future now. It's an interesting thing, you know, if you like movies like Ready Player One, this is basically what they're looking at and building. They're trying to build a Ready Player One type experience. You know, I think the simulation argument, the simulation theory, is one of the most interesting theories in the world. If you don't know the simulation theory, there's a lot of really good documentaries on it, like A Glitch in the Matrix is one. There's a lot of really good ones. Essentially what the simulation theory states is that, or theorizes, I should say, is that if it's possible for us as humans to one day build virtual reality simulations in which they're virtually identical to what we currently see out of our eyes, if it's possible for us to one day build that, it's actually much more statistically possible that we're already there and that we're already in that and we're just oblivious to it, which is a weird theory. But, you know, I think stuff like this, Meta as a company, virtual reality, you know, my son and my daughter love the Oculus Quest 3. They didn't really like the 2 that much. I bought them the Oculus Quest 2 years ago. They didn't really use it that much. They've been on the Oculus Quest 3 much more, playing with friends, hanging out with friends, socializing, all that good stuff with their friends. And they're just using it a lot more. I can't really do it. I get headaches. I was always, you know, I always got motion sickness in cars. Like if I go on a boat, I'm getting sick. You know, if I go on an airplane, I'm getting sick. Right? If I drive for extended periods of time and I try to read or watch a video on my phone or work or focus on anything else, I get sick. And so I've tried the virtual reality headsets and I genuinely just get really sick. It just doesn't work for me. I just get sick. I can't play them longer than like 10 minutes, and then when I do, I get massive headaches. It's just not for me. And maybe they'll fix that. I don't know if they can even do anything about it. And maybe it's a conditioning factor. Like maybe it just takes time to condition yourself to be used to that type of thing. But for me, I'm just not that good at it. Nvidia's 100% pure play. AMD, well, AMD's down. Nvidia's still doing all right. Nvidia at 140s, 130s. I also like Microsoft, but I wish they would go crazy on innovation again. Well, Microsoft's more conservative. Let's look at the PE ratio for Meta. So let's take a look at the PE ratio. So Meta PE-wise, let's take a look. Can y'all see this? Yeah, y'all can see it. Okay, good. Yeah, we got Microsoft, Meta, Robinhood earnings, a bunch of stuff going live today too. All right, guys. So, yeah, I'm checking a lot of stuff here. I'm going to be looking at the PE ratio for Meta. Let's calculate it here. So, I'm sorry. ADHD caught my attention for a second. All right. So, make sure. So, we're 10. This is Visa. Let's take a look at Meta. So Meta's last 4 quarters, the way you calculate PE is you add up the last 4 quarters. We don't know today's yet, but the last, we had 5.16 plus, where we go? Yeah, 5.16 plus 4.71 plus 5.33 plus, man, what a strong 5.33 4.39. Yeah. All right, so that gives a quarterly or a yearly EPS of 1959. Now, let's say 593s divided by 1959, and you get 30. You got a P/E ratio of 30 for Meta. So we'll see what happens. So 30's not terrible. It's not necessarily like a crazy good PE ratio either. I wouldn't call it good. I wouldn't call it bad. It's somewhere in the middle. Now, again, one of the interesting parts of Meta is that they have had, they've had some crazy streak of green earnings. Their 9th consecutive quarter exceeding revenue estimates. PE ratio is currently 30. We'll see what happens, chat. We'll see what happens. Do me a favor, bump that subscribe button, man. Hit the notification bell. We appreciate it. GDP data came out today. GDP data came in a little light at 2.8%. We got 15 minutes, chat. Let me put a timer up. I'm sorry. I forgot to put the timer up. Their 9th consecutive revenue quarter is what they're pushing for. If they exceed revenue again, that'll be their 9th. Yeah, so here's the closing bell. Again, Meta in a really nice trend. I'm going to put a weekly chart or a minute chart up. Currently at 592s. A little volatile before the bell, but that's okay. And again, they're scheduled to release just after the close, along with Microsoft, Coinbase, Robinhood, Carvana, Roku, Starbucks, Etsy, Riot, DoorDash, Transocean, MGM, and more. eBay, Twilio, Teladoc. So a lot of stuff going on right now. Yeah, so it actually changed it a little bit, Pew Pew. So originally, prior to the GDP report, as well as like we had prelim payroll data, which were way higher. What ultimately changed the rate expectation, I don't think was actually GDP data. GDP data came in 0.2% lower than expected. Still pretty strong GDP at 2.8%. What I think changed the rate cut expectations, prior to these reports this morning, it was at 99 to 1%. 99 to 1%. 99% likely that we're going to cut rates 25 basis points, 1% chance that we weren't, and that we we're going to pause rates. But payroll numbers came in, they were expected at 110. They ended up showing, what did they show up? They showed up something crazy at like 250s or something way higher than expected. Yeah, they showed 230s versus 110. Way higher payroll numbers, prelim payroll numbers, not payrolls, I'm sorry, way higher employment change numbers than expected, which is kind of like prelim payrolls. Payrolls dropped this Friday. 2 days before that, there's always prelim payroll numbers called the non-farm employment change. They showed up way higher than expected, showing a much stronger economy than expected in terms of ADP payroll employment data. Super high. Payroll numbers last time were super high, and so I think that made it go down a little bit. Now when you look at the rate cut odds, it's much lower. It's not much lower. It's lower. It's like 4% lower now. If we look at the CME Watch tool, it's currently at 95% to 5%. So it did change. Not a lot, but it did change some. So that's where we're at now. Again, Meta, very strong upward trend here. You can kind of see it. Let me draw it out if I can. I think this trend's super obvious. Super obvious trend right here for Meta. I don't know what it's going to do, but that's the trend we're currently in right now. Be so honest, do I sell my Robinhood for Meta? I have no freaking idea. I'm not an investment professional. Genuinely no freaking idea. Top 3 worst predictors in the world right now. And don't copy me. I'm not an investment professional. Does Meta have that much expenses to be bearish? Well, it's not about expenses. It's You know, one of the things that happens when you post almost 8 in a row revenue beats is that it kind of dilutes it. If a company never beats earnings and then all of a sudden it beats it by a huge margin, what generally happens? The stock's going to go up, right? Meta has had 8 in a row revenue beats. Meta has beat revenue expectations 8 times in a row, right? In that regard, like if we look at Meta revenue graph here, Meta has beat these expectations over and over and over again, right? It's had 8 consecutive revenue beats in a row, right? If it does it today, it'll be its 9th consecutive earnings beat in a row. And I'm not saying this, like Meta stock, again, has done exceptionally well. If we put a weekly chart up, you know, Meta's killed it. It's done great. Since its downfall in 2022, late 2022, it has done amazing. It's gone up hundreds and hundreds of percent, currently about 500% increase since late 2022. So in the last 2 years, really, it's gone up 500% for Meta as a stock. Its revenue beat expectations. Its EPS is a little bit less impressive. EPS are margins. So, you know, its EPS is not quite as impressive as the previous one, but still not bad either. It's not like Meta has bad EPS, which is earnings per share. You know, Meta's current PE ratio when we look at EPS is 30, which is pretty good. It's not great, but it's not horrible either. You know, you see like Nvidia has like 60 plus. You see Tesla has 60 plus, you know, stuff like that. And so here's their EPS, their margins. Their margins have been good also. So Meta's pretty healthy company overall. And honestly, it proved me wrong. I was bearish on it in 2022, and it definitely proved me wrong. Don said I bought $5,000 of Meta January this year, and the return is great for me. Yeah, I mean, it's up hundreds of percent. Yeah, we're going to cover all the big earnings. Robinhood, Carvana, Coinbase, Roku, Starbucks, Etsy, Riot, DoorDash, Bookings, more. We're going to cover all of it. Hood versus Meta, what we thinking? I have no idea. We'll see. All right, guys, we got 8 minutes. All right, we're going to throw it in sub-only mode if you haven't already. Looking at our poll numbers here, 68% are bullish on Meta today. 31% are bearish. 32% are bearish. We also have PCE data tomorrow, which is a pretty big report. Coinbase also drops earnings, and with Bitcoin getting pretty close to all-time highs, yeah. It's a better hourly chart, I guess. It's probably a better trend, yeah. Hourly chart looks really nice. Where's Bitcoin at today, though? Bitcoin at 73,000. So Bitcoin close to all-time highs. I wish I bought more Meta. Is that binary? D? I wish I bought more Meta too, bro. Only if hindsight. I'd like to make a movie about stocks called Back to the Future, but about stocks. And I would just get rich, and that would be the end of the movie. Coinbase up. Yeah, Coinbase, I'm looking at it. Coinbase has had a crazy good year too, mostly driven by Bitcoin's resurgence. I remember when Coinbase was struggling to break $50 a share not that long ago. In 2023, like a year and a half ago, Coinbase was struggling to break $50 a share. Back in like June of 2023. It's now over 200, sitting strong. Coinbase earnings are expected at 39-cent profit at 1.25 billion in revenue. So, yeah. All right, guys, we got 6 minutes. 6 minutes left. Be ready. Let's see if we get anything good. Remember, the earnings call, we're going to stream the full call as well. Did they free Supermicro stock shed? Do you have any expectations for Meta? I don't know. I guess I think Meta's gonna drop a little bit, but it's just a hunch. I really don't know. I might be wildly wrong. Supermicro Semiconductor stock has had a really bad day. A really, really, really bad day. Supermicro Semiconductor had independent auditors decide to walk away from disorganization in the company, books and everything. They walked away. They said they don't want to deal with it anymore. And this is on the heels of Hindenburg's short report that dropped not that long ago. A lot of people are losing money on this. This is something that, again, people have been asking me about Supermicro for months now. I've never been a big, it's Supermicro moves too crazy. Like, I'm not going to buy up anything that's gone. I'm not going to buy up anything that has made the type of move Supermicro has done, right? Like, people get so greedy in stocks. Like, they get greedy. And the problem is that Supermicro in 2024 was at $25 a share. It was a pre-split price of $250. It went all the way to $1,200, over $1,200. And then it fell all the way down to like $700. And then it fell all the way down to $500. And now it fell all the way down to $300, a pre-split price. So basically, if we're talking about a post-split price, Supermicro went from $20 a share up to $120 something. And then it fell all the way back down to where it was. Right? That's a really rough chart. I'm not saying it can't come back. It's a risky chart. The problem is the float size for Supermicro is tiny for a company this big. Right? So when you have a tiny float like this, it's going to move huge percentages up and down. It's big risk, big reward. And so too many people want to be greedy with it and try to make some ridiculous gains, but they end up having ridiculous losses instead. And then they get emotional about it. It kind of turns into like a cult-like stock scenario where, you know, a bunch of people get together and just pat each other on the back talking about how great the stock is. And anybody that comes along being like, hey, it's kind of sketchy, they just kind of shame it. And so that's kind of what Supermicro's turned into, unfortunately. But yeah, it's weak. Company looks to be in shambles as well, to be completely honest. Anyways, guys, we got 3 minutes until the closing bell. 3 minutes to the closing bell. We also have Microsoft, Coinbase, Roku, Starbucks, Etsy, Riot, and more earnings dropping soon. We got about 500 people here, still got 3 minutes. Do prices ever survive the Hindenburg short? Sure. Like, the Hindenburg's not always right. Hindenburg short report called Square short, and it dropped under 50, and now it's at 73s. What's more some? I know they. What was the one recently? What was the Hindenburg short report prior to? It was one of the big billionaires companies. Who's the old billionaire that's always angry, yelling at people? What's his name? It was his company, I'm pretty sure. But Hindenburg's not always right. They're right a lot, though, but they're not always right. I think they got too big too quickly, Justin. I think they grew too much too fast, and it had to do with the float size. And when a company grows that big that quickly, it's kind of like Peloton, right? Peloton got really big really fast in the beginning of the pandemic. What happens is companies start burning money when that happens. Like, they start doing a bunch of dumb stuff like trying to create virtual reality rowing machines like Peloton. And nobody's going to want to use a virtual reality rowing machine. The amount of people that want to use it does not justify the price for it and how much it costs to make. And so the margin's not there. But when companies get big, there's disorganization and they just struggle, right? And that's what happened with Supermicro. It got really big really quickly, and now the internals are in shambles. At least that's the picture that investors are getting from the outside. I'm not saying any of this is true or isn't true. That's the big picture investors are getting from Hindenburg short report, news coming out. There's always a chance that it comes back, though. There really is. There's always a chance. Yeah, IEP is who it was, Blaze. That's right. So they did a one on IEP. And IEP never recovered from it. They dropped from $70 a share in 21 to $13. I don't know when. I think the report came out May of this year. Or no, May of 2023. And it was at 50 a share. Now it's at 13s. All right, guys, 20 seconds to the closing bell. All right, here we go. Yeah, for sure. I agree, Pew. All right, 10 seconds. Here's the closing bell, guys. We'll see when the actual Meta earnings come out, though. So we'll zoom in. I'm going to put Microsoft up, too. We're going to cover all these things. All right, so there's the close. We got to put a 1 minute chart up because that's when we're really going to see the numbers move. All right, guys, there's the close. Meta currently at 592.40s around the closing bell here, chat. 592.40s. Technically, the numbers are scheduled to drop in 5 minutes for Meta. Technically at 4:05, but again, they can and are released randomly after the closing bell. So they can go up, they can go down. They could drop 5 minutes after the close, 2 minutes, 1 minute, 10 minutes after the close. We'll have to wait and see. All right, so Meta dropping down a little bit at 591s. Look at Microsoft, guys. Look at Microsoft. Microsoft numbers are out. Look at this. Microsoft numbers are out. They're dropping all the way down to 419s, and then they retraced all the way back up to 430s. Microsoft numbers are out. Bear with me. I'm going to find them, but they're out. I can see in the movement from Microsoft. They're definitely out. I could be wrong, I guess, but I don't think I am. That's a big... I could be wrong here, man. Maybe I'm just exaggerating it, but doesn't that look like Microsoft numbers are out? Maybe I'm just getting emotional over here. I don't know. Microsoft reported 330 versus 308 expected, revenue of 65.6 versus 64.4 billion expected. Here's Microsoft's numbers right here. So Microsoft is out. I'll put these up. We're still waiting on Meta. I'll put these up in the chat. But yeah, so I figured they were out. And then Meta's just moving in sympathy from it. Okay, that makes more sense. I was wondering, man. So Microsoft 330 EPS versus 310 expected. Beat EPS, revenue of 65.6, beat the 64.5 estimates. So Microsoft better than expected EPS and revenue. Kind of flat on these numbers, though, for Microsoft. Didn't really do much from it. Again, Meta. So Microsoft released early. Meta's still scheduled to drop in 3 minutes. Microsoft's up to the top of the range. So, I mean, these numbers are pretty good for Microsoft. They're pretty good. All right, guys. So, again, we got a bunch of other ones dropping. We got Coinbase. We got Carvana, Roku, Starbucks, Etsy, Riot. A lot of earnings today, chat. A lot of earnings. All right, look at Meta. Meta up to 590s. Chat, 590s for Meta. Looks like their numbers could be out. Not a huge move so far relative to the price action here, but Meta's up to 598s. Meta looks like they're out. They're almost up to 600. Still waiting, though. I don't see Meta's out yet. Let me check the site. Yeah, I don't see him out yet, so Meta's not out, I guess. Bookings is out. So I'm going to put all the ones that do drop right now. Meta's scheduled to release in 2 minutes. I think Meta's just following Microsoft's sympathy. Here's Bookings. Bookings is out. Yeah, it does look like an out candle, but I don't see it on the site. It's not on the site, so they haven't... We'll see it when they come out, but they just haven't put it out yet. So many emotional investors, man. I see the X pages. Meta beat. Meta don't break my heart. Meta up. Meta down. Meta's good. Meta's bad. All right, guys. Hey, Meta's coming out pretty soon in about 20 seconds. Chat, 20 seconds is when Meta's probably going to be dropping their numbers. Again, let's see what happens. They should be releasing very soon. I'm showing you the expected number, Dion. The expected number is 519. That's what's expected for Meta. Analyst expectations are different than the actual numbers usually. Sometimes they're in line, but usually. All right, there is the scheduled time Meta was supposed to come out. And there's Meta's big candle. Look at that candle. So Meta's now out. So you can see the movement now. Meta down. 585s. 570s for Meta. 570s. Meta ended up showing. Yeah, so this is what it looks like when they're actually out. All right. Meta. $575, 560s for Meta. $570s for Meta. Meta posted 603 EPS versus 519 expected. Revenue 40.59. They expected 40.25. So they beat EPS, beat revenue. I'll put these numbers up on screen. But yeah, they're out. Here's their numbers right here. Again, and I talked about, somebody asked me prior to this what I thought Meta would do. I told you guys I thought Meta would drop, right? Why do I think Meta would drop? Again, maybe I'm wrong. Maybe we rebound. But I think Meta has outperformed over and over and over again. Eventually, the train's going to stop. Like, eventually, they're going to react negatively just in terms of profit taking and stuff like that. The extension is high. But again, we're starting to rebound. Let's see if we go back up. Let's see if we can break $600 a share. I'd rather it go up, and I hope I'm wrong. Again, Meta completely flat on its earnings report. Starting to get some legs here, though, and start to push up. Top 3 most wrong trader ever. Coinbase is now out. Meta at 591s. All right, so we got Coinbase. I don't see Coinbase numbers out. Coinbase was scheduled for 410, so it's scheduled to drop in 3 minutes. Is it out, though? Is Coinbase out? Crazy reaction so far, though. KLA, Amgen. Amgen's now out. We're going to put those numbers up on screen. You are dead wrong on Meta. Yeah, but I mean, I think you're probably, yeah, like you said, it's for your own good. It's, I don't know. I don't know. We'll see. Again, Coinbase drops in about 3 minutes, 2 minutes. Yeah, the problem is that Meta has gone up so much. This is Meta's 9th consecutive. This is Meta's 9th consecutive revenue beat. All right, so again, Meta, Starbucks just dropped. Starbucks expected 80 cents, lost. Worse than the 103 estimates. Revenue of 9.07, missed the 9.38. So Starbucks missed EPS, missed revenue. eBay is out. eBay beat EPS by 1 cent. Came in at 119 EPS versus 118. Expected revenue of 2.6 versus 2.55. Yeah, Meta's right below me. Not the weatherman it really quick, but Meta's right here. Aquí. Mi amigo. Again, this is just the initial reaction. So people saying, oh, I thought Meta was going to do this or that. This is just the initial reaction. Meta can freaking do anything here, guys. Nobody knows what Meta's going to do. This is just the initial reaction. Did Riot come out with their numbers yet? Well, Riot moved a little bit, but not that much. It might be just based off of Coinbase here. Coinbase is down to 203s, 204s. All right, so Microsoft killed it. They did great. Meta killed it. They did great, but they're now dropping down. Both of them. Microsoft outperforming price action for Meta, though. Yeah, Coinbase now down to 202s, looking kind of weak. Aflac also posted numbers. So Starbucks suspended their fiscal year 25 guidance in light of CEO transition and current state of business. So Starbucks ain't looking great. Starbucks is down to $96 a share. All right, guys, so we're going to give you some more updates on Meta here. So Meta is out. We're going to start giving you some of these metrics in chat. So Meta guides quarter 4 revenue at $48 billion versus $46.2 billion. So they guided better than expected. So guided fourth quarter revenue at $48 billion versus $46.2 billion expected. I don't understand. Meta beats expectations, going strong, and people are selling. Can someone explain? Yes. So stocks are not going to go up and down based purely off of the price action on one specific moment in time. You know, like if stocks only went up when they beat EPS and revenue, then people would be sitting around waiting for companies to beat EPS, beat revenue, and they would just click buy, and everybody in the world would be rich because nobody would have to do anything else ever. It's just not that simple to make money in the stock market. I wish it was, but it's not. Okay, if it was, again, I'd sit around and wait for Meta to post good EPS and revenue and just click buy and ride off into the sunset rich. But unfortunately, market's not that simple. You know, you got months of time leading up to this earnings report where traders are making all their decisions based off of what they might potentially show for earnings, right? So it's super nuanced, not very simple in that way. I wish it was, you know. Again, everybody would just. I hear this all the time. I cover a lot of these big earnings reports, and I hear it all the time. I hear, oh well, you know, Meta had good numbers. Why is it going down? You know, Tesla had good numbers. Why is it going down? Because it's not it's not that easy. It's just not that easy. Again, I was actually correct. I predicted. People asked me what I thought Meta was going to do in terms of price. I said I thought it was going to go down, and you know, the only logic I used to make that prediction was extension. I used extension logic. It's extended on the upside. It's had 9 consecutive revenue beats in a row. Eventually, that's going to dilute the reaction that we get from it. And investors are going to start taking profit because they're up such a huge amount. Well, Meta's PE ratio is about 30, which isn't not horrible, but it's not great either. You're great, John. The stream is not about guessing. I love your work. Hey, thanks, subscriber. I appreciate it. Yeah, Microsoft turning around too on the downside. This is dragging tech down with us. So Equinix is out with their earnings. They came in at 310. We'll put these numbers out on screen as well. Did Coin announce yet? I don't see Coinbase out yet, but I could just be missing it. Let me check. So Meta expects Reality Labs 2024 operating losses to increase year over year. They updated fiscal year 24 total expenses to $98 billion from $99 billion. What the heck's a quid? I'm just joking. I know what a quid is, but why are you using that? This is where we're going to see if AI does really well. So, again, so Meta's quarter 3 revenue Meta's quarter 3 earnings report highlighted robust growth in revenue and earnings fueled by gains in digital advertising and ongoing AI integration. They reported nearly 18% year-over-year revenue growth, reaching about $40.3 billion, EPS of $5.23, up from $4.39 in the same period last year. So Coinbase just released. They came in at... I'm not showing what they came in at. Coinbase is out, but hold on. For whatever reason, Coinbase revenue showed up at 449. They expected 448. Adjusted EBITDA is, 449 versus 448. Revenue came in at 1.2 versus 1.25. They missed revenue for Coinbase. Microsoft bounced up a little bit. Yeah, so Meta came in at 603. All right, so higher EPS underscores Meta's ability to leverage AI in optimizing ad placements and increase profitability despite continued investments in areas like Reality Labs, posting significant losses. Investors and analysts are viewing this earnings beat positively so far. So DoorDash did report earnings. They posted 38-cent profit versus 21 expected. Revenue of 2.7 versus 2.66 billion. We'll post this number here as well. I don't recommend y'all buy anything because I have no freaking idea what I'm talking about, and you don't want to copy me because I have no freaking idea what I'm talking about. Not an investment professional. Again, I like Meta long term. I like most of the Magnificent Seven long term, and I think the name of the game there is. I was talking to somebody about this before, but listen, chat. If you're gonna invest money, okay, what you do is that if you need the money anytime soon, buy bonds, short-term bonds, guaranteed returns. Buy CDs. You know what I mean? Open up CD accounts, like money market accounts, like stuff like that. If you need the money short term, if you have time on your hands, long term, Nasdaq, S&P 500, Magnificent Seven, dollar cost averaging, very very safe returns long term. If you're holding something for over 10 years, the S&P, the Nasdaq, the Dow give you very consistent 10% a year on average. And when you include compounding into that equation, it's a powerful thing. Right? The problem is that you could get unlucky and get stuck in a market crash. You can get unlucky and get stuck in a bear market. It's not going to happen most of the time, but you could get unlucky. And so there's risks, which is why I say if you're investing short term, like get something guaranteed or safer in that regard. If you're holding something long term, diverse. If it was me, and again, I'm not an investment professional, I have no freaking idea what I'm talking about, but if it was me, I would buy the S&P, the Nasdaq, the Dow, gold. I'd handpick some Mag 7 stocks and DCA into them. I'd maybe buy some bonds. I'd buy some real estate investment trusts and some real estate diversified into different sectors of it. And I would just sit on that long term and earn my money through compounding over time from that portfolio. But again, that's just me, and it's a very subjective thing. Microsoft right flat in the middle. Chat, right flat in the middle. I don't see Riot's numbers. I see DoorDash. I don't see Coinbase's numbers either. I see some of the Coinbase numbers. All right, so Coinbase EPS 28 cents, missed the 42-cent estimate. Sales of 1.21, missed the 1.26 estimates. So here's Coinbase right here. Microsoft beat EPS, beat revenue as well. They did great. I'll put those numbers up in chat if you want to see them. Microsoft showed 330 versus 310. And again, we're posting these as we get it. Starbucks was probably the worst earnings report this one. Also, guys, if you haven't already, check out TopStep. TopStep funded account program in futures. They give you a demo. They test your skill with it in futures. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, it's $49 for the base one. If you want to learn to day trade, do not risk your own money. Almost all day traders lose. Doesn't matter where you go, what course you take, who you follow, most day traders lose. And so it makes no sense to fund your own account. TopStep gives you a demo. It's like a middle ground demo account. It gives you a demo. They test your skill with it. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, it's $49. They give you a $50K demo. If you can make $3K without losing $2K and following their rules, they fund you $50K with a 90% split, which is similar to funding yourself. But if you lose, you only lose $49. It limits your risk, very similar to funding yourself in terms of split. In the futures market, you can day trade the S&P, the Nasdaq, the Dow, the Russell, gold, some currencies. Patterns are very, very similar to blue chip stock patterns. It's just a great way to learn how to day trade and get started. And if you don't have that much money, you can get started for less and lose less ultimately when you're learning how to day trade. And it's a powerful thing. If you want to check it out, they are an affiliate or sponsor of mine. I am biased because they pay me money. Remember, guys, I am terrible and have no idea what I'm talking about. All right, not an investment professional. Understand CFTC 4.41. And let's get that top 3 disclaimer out the way. Yeah, Apple, Amazon earnings tomorrow are going to be freaking crazy. Starbucks just cracked lows again. MetLife just posted numbers. These are mostly insurance companies. Aflac, MetLife. Yeah, this week's crazy volatile. Tomorrow we have PCE inflation data. We also have jobless claims, unemployment data. Friday we have non-farm payrolls and unemployment data. Next week we have the rate decision as well as some other big earnings like AMC. We also have Amazon and Apple earnings tomorrow evening. So a lot of stuff going on. I'm wondering what the viewership's going to be like on Halloween though, but still. All right, so these are the numbers. We are going to cover the full Meta earnings call, chat, as it goes live, as we always do. Full Meta earnings call. MGM Resorts. So MGM just posted numbers. They posted 54-cent profit versus 61 cents expected, a miss. Revenue of 4.2 versus 4.21. So MGM just missed EPS and revenue. I don't understand the Coinbase dip. Their margins were bad, and they're up a lot. So their margins are bad. They're up a lot. They missed EPS. Yeah. So Coinbase ended up showing. They missed. Here's Coinbase's numbers. They just missed a lot. They missed EPS. They missed revenue. They missed EPS, missed revenue. They missed both the major metrics that you look at earnings. Yeah, the Llama engine is interesting, Omar, for sure. Yeah, AMD's still down a lot. You know, the problem is, like, you might be looking at AMD like a discount buy. The problem, though, is the PE ratio for AMD is still ain't good. You know, it's like when you look at Meta's got a PE ratio of 30. Right? Pretty reasonable. Good PE is like 15, right? 15, 20. Ideally, perfect is like 15, 20. 30 is not bad, though. It's not terrible. You look at like Tesla's got like 50 or 60. NVIDIA's got over 60. AMD's PE ratio is currently 147. I don't think that's right, though. Let me calculate this myself. They're looking at some like generally accepted accounting principle stuff. Which could influence his numbers. So again, 92 cents from AMD plus 69 cents plus 62 cents plus 77 cents. Nope. All right, so $3. Is that right? $3? Yeah, I guess that's about right. $3 exactly yearly EPS for Meta. For AMD. Meta's currently 148 divided by 3. All right, so AMD currently has a PE ratio where it sits now at 49. That's not as bad as it was. It was worse than this, believe it or not, when it was at 160s. But it's not good either. You know, a 50 PE ratio is not good. It's high. But at the same time, you got to take the rest of the Magnificent Seven stocks into the equation. And when you consider those, it's not the worst it could ever be. You know, there was some people are saying it had like 300 or 400 PE ratio, which is not true either. But it's not good. Yeah, it's not good. All right, so Microsoft Q1 2025 GAAP EPS 333.09, sales 65.6, beat 64.51. Microsoft said AI-driven transformation is changing work artifacts, and workflow across every role, function, and business process, according to Satya. Yeah, we'll put this up on screen. Can we get a repeat of the Meta results? Sure. So I'm going to put these numbers up here so I can just show you guys this. Meta ended up showing 603 EPS, beat the 524's expected, revenue of 4.59 billion versus 4.27 billion expected. We'll put these up on a big old banner. They also guided for fourth quarter revenue higher than expected. So they guided better. So there's the numbers right there for Meta. Yeah, no, I see that too, Michael Jordan. I see that as well, but it has to do with how they calculate it. They use like some weird GAAP formula. GAAP stands for generally accepted accounting principles. And so the real PE ratio, when you add up the last 4 quarters of EPS and then you divide that by the price, is about 49 to be exact, which is, it's not horrible, but it's not good either. It's somewhere in the middle. It's on the bad end, but it's not horrible. You know, I'm trying to be nice about it. I honestly just can't believe Carvana. What did Carvana show? I don't even see Carvana here. KLA posted numbers as well. We'll put those numbers up on screen. Carvana's had one of the absolutely most ridiculous runs I've ever seen for any stock ever, dude. Carvana was almost certain to fail a couple, like, not that long ago either. Carvana posted 64 cents. They just killed it, man. Look at them. Here's Carvana's numbers right here. When you look at Carvana stock, like, look at this thing. This thing's up big. This has been one of the single biggest rebound success stories in stocks in the last decade. If we put a weekly chart up for Carvana, look at this weekly chart. All right. So Carvana, guys, went from $360 a share in August of 2021, $360 a share, all the way down early 2023 Carvana, guys, was a penny stock at $3 a share. So it went from $3.60 down to $3 a share. Everybody said it was done, including me, to be fair. And then it bounced all the way back from $3 a share to $2.07, where it currently sits now. What a crazy rebound here. So again, currently at 207s. That is a 6,800% increase from its 2023 lows for Carvana. What a ridiculous move, man. What a ridiculous move. And I don't really know enough about Carvana as a business. I've never bought a car on one. I understand the business, which they're just hoping people will eat some costs for convenience. Like if you make it really convenient, people will just basically give their cars away, I guess is the business model, for really, really cheap. And I think that's pretty accurate. Correct me if I'm wrong, but their business model is, hey, let's make it really convenient and just find somebody that's so lazy that they don't feel like doing anything, and they'll just give us their car for 30-40% less than it's worth. But we'll deliver it. We'll pick it up for them, you know. What a kind company. But that's basically their business model. And honestly, they're showing that it works. Do you think Spirit Airlines can pull a Carvana? I don't know. I know there's one thing is I don't really want to be cheap with airlines. So save at 250s. I mean, it's an airline. It definitely could. Will it is a different story, but it definitely could. I think if you're going to invest and save in Spirit, you got to just be okay with losing whatever you invest in it and hope it bounces. Because it could. I mean, it's possible. All right, we got the Meta earnings call going live. 5 p.m. Bitcoin going to the stars November 6th. Buyer. Airlines are doomed as long-term investments. Why? I mean, here's the problem, right? So one of my favorite investments that I ever freaking made was United Airlines. After 2020, airlines were struggling. If we look at United Airlines, post-2020, these things were struggling. You know, the pandemic happened and it dumped United Airlines all the way down to under $20 a share. I made a video at the time saying I was going to buy it up. And I had so many people make fun of me for this call. I said, hey, I'm buying up United Airlines. I think it's going to bounce back. It's a necessary business right now, especially. People need to fly. They don't just want to fly. A lot of them need to fly. And so that's going to make the infrastructure rebound a lot quicker than people think. They're overestimating weakness for airlines was my thesis, right? And this was years and years ago. I ended up buying United Airlines around $20, $20-something a share. Got so much freaking hate for it on this video. Very quickly, crickets happened, and United Airlines ended up bouncing all the way back up 100% to $40 a share very, very quickly within a couple weeks. And every person that hated on me in the comments deleted their comment, right? Believe it or not. I had multiple people talking smack. A lot of them deleted their comments. I'll have to go find that video. But it kind of shows this, like, people overestimate weakness in airlines. Now, you got to bet on the right airlines, though. Look at Meta starting to bounce back. So Meta's back up to 585s. So Meta's back up to 585, so we'll see. One thing that, like, listen, I've been trading stocks for years. One thing that I've learned is that when something's down really, really big and it's a blue chip healthy company, it's usually time to buy that thing up, right? Now, what you consider really, really big is all subjective and relative to the person. Some people might think a $5 dip is really, really big. Others might think a $100 dip is really, really big. When something's down big, you know, the saying, be fearful when others are greedy and greedy when others are fearful, absolutely is true. Absolutely is true. And the problem is that most people are so afraid that they don't end up taking risks when they should. You know, you could kind of talk about it on the other end, but still. What do you think about Supermicro semiconductors? Yeah, no, I'm not talking about. Yeah, I mean, I'm giving a story. The overarching point I was trying to make, Straight Jacket, was that people overestimate weakness in airlines. people have to fly. You know, like they're gonna fly. Somebody said, do you have a proper analysis to support your thesis of airlines are a declining industry, or are you just BSing for attention? I'm curious what your argument is, for sure. I know, but I guess the point, why do you think airlines are going to be weak? What do you think is going to replace them, I guess, is my big question. Because I don't think we have any technology thing close to replacing airlines. I definitely don't think the space industry or the rocket industry is anywhere near doing it. You know, people used to get all big about SPCE, Virgin Galactic, and I was telling people this thing was weak for years before it started downtrending. Rosie, baby. Hey, girl. This is my dog, Rosie. She's the best dog ever. Look at this baby. Come here. Come here. Yeah. Yeah. Look at this girl. Look at her. Oh. Here. Yeah, it's fine. All right, baby. I love you, Rosie. Have a good. I'll see you later, okay? But no, people got all weird about SPCE. The problem with the space industry, it's so expensive, man. Like, that industry is so freaking expensive. Like, that industry is hella expensive. It's nowhere near completion as well. I don't think anything's going to be replacing airlines anytime soon. Now, whether I think United Airlines and some of those are extended on the upside short term as well, though. But like, if we're going to be talking about airlines failing, there needs to be a reason why. You know, that's kind of like me saying, well, let me think of the best analogy for this. There's a good analogy somewhere here. It's kind of like saying, hey, I think car companies are going to fail moving forward. And when somebody's like, well, hey, why do you think car companies are going to fail? They just are, right? There's no reason. There's no argument behind it. I just want to hear the argument. Need for business travel will drastically decline due to technology and remote capabilities once business travel. Okay, actually, you know, not to pivot, I can see that. I regardless of whether I agree with it, I respect the argument. Because that might be true, right? I think technology evolves, remote work picks up. I think that is a true aspect of our future. And so maybe you might be right. I mean, I could kind of see that. I think you could be right in that I think airlines are going to stay around, but they could arguably lose margins over time due to less people needing to fly around because of remote work technology. I think that's very possible. That's plausible. That's a reasonable argument, and I can support it. Again, I'm not saying I agree with it, but I can understand how it could happen for sure. Do you guys agree with that argument? I don't hate it. You know, I really don't hate it. I mean, you know. I mean, people are always going to need to fly, though, regardless of whether they need remote work, traveling, holidays, you know, vacations. People still need to fly. But we could have less of a need for it over time because of remote work capabilities. But it's not gonna change. What most likely would happen is that airlines would just adjust prices to compensate for it. And so even if you don't have the commercial need to fly around for work, you know, if that segment of their business fell off a cliff overnight, they would just adjust prices to compensate for it. And so we as consumers would pay more. And I think we're actually seeing that over time. I think airport prices have been going up, certainly with inflation. To fly anywhere, it's usually, for a family of 4, for me, it's thousands of dollars. Like, I was supposed to fly somewhere in October. The tickets for it, for me and 3 others, was like $2,000. Like, and that was for economy class. Like, I'm not, you know. Yes, we're streaming Meta's call for sure. All right, guys. So again, Meta at 585s. All right, so again, Meta's Q3 earnings delivered big, impressive results, surpassing market expectations. This is Meta's 9th quarterly revenue beat in a row. The company reported revenue of $40.59 billion, up 19% year over year, driven by strong growth in digital advertising powered by AI. EPS reached $6.03 a share, up from $4.39 a year ago. Net income at $15.69 billion. Additionally, Meta issued a positive forecast for Q4, projecting revenue between $45 and $48 billion as it continues to leverage AI and expand its offerings, including work on a proprietary search engine. These results demonstrate Meta's successful balance of AI investments and ad revenue growth with strategic shifts that could reduce reliance on competitors. So yeah, Meta currently at 581. It's kind of a neutral reaction to this. It hasn't really done much. It really hasn't. It hasn't really gone anywhere or done much here. So we'll see. Why Meta crashed? I mean, look, no offense, but do you genuinely consider this a crash? Chat, let me know. That's terrible drawing. Top 3 worst drawing ever. Do you think this is a crash, guys? Let me get my... Is this a crash, guys? I mean, it doesn't look crashy to me, but, I mean, it is subjective to a certain extent, I guess. Is this a crash to you, chat? I don't freaking know. Stop sensationalizing everything. Are you going to listen to the Microsoft earnings call? Yeah. I mean, I wouldn't. It's a negative reaction, but it's kind of flat. It's kind of neutral, you know. Microsoft's up a little bit too. It's doing pretty well. Thing to focus on in Spirit Airlines' case is the fact that JetBlue deal was blocked. Reason for the block, they want to protect the low-cost airlines. Keep that in mind. Yeah, maybe. Yeah, I mean, I think y'all have to think about, like, one of the things that people get wrong all the time with markets. People get this wrong so much, and it's so, like, and I've said this like a broken record, but I'm going to say it again because I think reinforcing my point's important here. I've gotten 4 out of 5 of the last CPI reports exactly right. And I'm not just talking about right in terms of if inflation came in high or low versus expectations. I'm talking about I have gotten a majority of the last like 5 or 6. I think it's 5 out of 6 of the last CPI reports exactly right in terms of predictions. Like last time I predicted, I think it was what, 3.2 or something, and it was whatever CPI was last. Let me see. And I've got them exactly right for a majority of the last 6 reports for CPI. Yeah, so I got, last time I said 2.4% for CPI in September, and it showed up at 2.4%. So I've gotten exactly right. The reason I've gotten this right, I'm bragging a little bit because, you know, I mean, what am I here for if I'm not going to brag? But I'm bragging a little bit. But one of the reasons I've been able to predict this is balance. If you can just look at everything from a simple balance perspective, you know, the Federal Reserve wants to balance things. Politicians want to balance things, believe it or not. Markets, efficient markets are balanced. You know, if you look at things from a balanced perspective, when you try to predict the outcome of these earnings reports, even though they're hard to predict, and I wouldn't recommend trying to predict them, or especially not betting any type of significant money on them, but if you start to look at things from a perspective of balance, things become more clear and predictable everywhere. Economic data, especially in terms of economic data, balance is predictable. And so before this earnings report, people asked me where Meta was going to go, and I told them down. Why did I say down? Because of balance. Meta's up a lot. It's gone up a huge amount. It's had tons of revenue beats in a row, and that's going to dilute it. And just in terms of general balance, regardless of what EPS and revenue showed up as, I thought Meta was going to drop a little bit, and it did. Now, it might still rebound back up, but you got to start looking at stuff in terms of balance. It's something that genuinely helps me. It really, truly does help predict things. If you start to look at balance, you know, it's not always going to be there. There's always variance. It's like poker. I love poker. It's always variance. But try to look at things from a balanced perspective. It makes it much more predictable. I'm serious. You know, I'm putting myself in this hole, though, where I'm telling everybody about how I got all these CPI reports right. And now the pressure is going to be on Pressure's going to be on. All right, guys. So we got 19 minutes, 18 minutes until Meta releases their earnings call. No, I literally got them exactly right. I had Pawn go back and clip them, which, to be honest, it started to freak me out. It genuinely started to freak me out. Y'all have heard me tell the story of the baseball story before, but it really genuinely started to freak me out. We got some Microsoft data coming out. All right, guys. Sorry. So yeah. But no. So yeah. So I got a majority of the last 6 months of CPI reports exactly right, which is very strange to me. I never thought I would be able to predict them exactly right, but somehow I did. And I still think there's a big luck factor, as much as I've been talking about it. And again, if y'all got them right 6 times or 5 times in a row, y'all would never shut up about it too, you know. But as hard as it is for me to admit this, there's definitely at least a little bit of luck in there. But again, the reason I got those predictions right was balance. I just looked at balance. I'm looking for Riot's numbers. Yeah, Riot's out. Riot posted a 54-cent loss. They missed the 15-cent loss estimate. Sales of 84.78 million. They missed the 95 million estimates. So here's Riot's numbers right there. They missed a lot. Yeah, Carvana doesn't care about balance either. People are worried about spending, and if they are spending on augmented reality or AI. I think it's fine to theorize what might happen in airlines moving forward because of technology advancements. I think that's fine. I think it's understandable. It shouldn't impact anybody majorly. You know, you got to diversify. You shouldn't put everything you have on airlines, you know, because technology evolves over time. But what do you think about Supermicro semiconductors? Cheap at the moment. I think it's really risky, and I think it got really hyped up really fast and overhyped. And one of the biggest weak trends I see in stocks, one of the biggest weak stories, one of the more pessimistic lead ups to a company's failure is when a company gets really, really big, really, really quickly, and then it starts burning money, destroying it from imploding inside from management problems and just issues, right? And I think that's something that we see with Supermicro Semiconductors. They had independent auditors that chose to walk away this morning and dumped the stock down. Supermicro Semiconductors is now down to $33 a share from $50 this morning. So Supermicro Semiconductors is down 45% this morning, or today. So a huge drop already, down almost 50% just today alone. It's super volatile, tiny float, really risky. Big risk, big reward, though. It could also bounce back big, and everybody's going to say, wow, if it does. But it's a high risk thing. So you could make a bunch. You could also lose everything, and so just be careful. The call's in 15 minutes. There might be a timer right there. You know, there might be. Riot is the blockchain mining company, Phil. So they mine crypto. The Meta call soon. We're waiting on it. You think Meta could go up for the next few weeks? I think it could. It could also drop for the next few weeks. Nobody knows. There's so much. There's so much potential variance in what happens based off of the election. Tomorrow we have inflation data. Friday we have non-farm payrolls and unemployment. Next week we have the rate decision. On the 5th we have the election. Like, there's so much variance that could potentially happen over the next 2 or 3 weeks. The week after that we have CPI. I have no freaking idea what markets are going to do. You know, anything could happen after the election. Anything could happen after the rate decisions. Anything could happen after Apple, Amazon earnings tomorrow. PCE day tomorrow. GDP data was today. We came in at 2.8% for GDP. There's just a lot of stuff. For whatever reason, the last 2 weeks have been really boring in terms of economic and market releases. Like, my channel is usually an economics channel. We cover economic releases. For whatever reason, the last 2 weeks have had virtually nothing go on in terms of economics, earnings, data. Very boring, quiet. I haven't known what to do the last few weeks, but for whatever reason, this week specifically, they had the JOLTS report. They had the JOLTS report. They had big earnings. Today they had GDP data. We also had prelim payroll data. Tomorrow we have core PCE inflation data, which is the Fed's preferred inflation metric, followed by Apple and Amazon earnings in the evening. Today we have all these crazy earnings. Friday we have non-farm payrolls and unemployment. So they consolidated every economic report and earnings report to this week for whatever reason. And then next week we have the rate decision on the 7th. And then we also have the election. So it's just kind of a crazy period of time, to be honest. Yeah, I have no idea what CPI is going to show up as. I'm going to wait and see and see if we can get some better stuff to do. And again, if you haven't already, check out TopStep. TopStep funds accounts and futures. They give you a demo. They test your skill with a demo account first. If you pass the test, they fund you. If you fail, you only lose what you pay for. The way I get funded on these accounts, and again, they give you a demo and they test your skill with a demo account first. The way I try to get funded on these accounts is I take a lot of risk and I try to build up $1,500 in profit on a demo account. If I can make $3K on this demo account while following their rules, they fund me. But I can only make 50% of that $3K a day. So I can only make $1,500 a day, and they do give you a little bit of room. And so today I'm up like $1,450. If I can get up to $3K tomorrow, I'm funded, right? So I'm halfway there today. And again, I built up this string of trades where we only had 2 losses out of 20, 90% accuracy. And again, this is futures. And in the futures market, it's very similar to day trading stocks. There's no PDT rule. I can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, currencies, and the patterns are very, very similar to blue chip stock patterns. The NASDAQ is the 100 largest companies in the world. And so the patterns move very similar to stock patterns, but I can actually day trade this, no PDT rule. The other big edge is that there's no commissions on TopStep X. It's the single biggest edge in funding with 0 commissions. Only a tiny amount of fees per trade. And I can also trade micros, and it's 74 cents in fees per trade. So a tiny, tiny amount of fees. They've paid out over $100 million to traders. And so again, they're an affiliate of mine. I'm biased, of course. I did go on TopStep TV yesterday. I'll be back on TopStep TV next week sometime. Also, there's the link. Check it out. No, but I'm pretty sure you can use... CPI is not next week, but the week after next. Yeah, I mean, you can say whatever you want, Blink. Most day traders lose money, brother. And so if you put up $5,000 trying to day trade your own account, you're probably just going to lose it, you know? Like, that's almost all day traders. And so people can say whatever they want, but, like, most day traders lose money. And so you got 2 options if you want to learn to day trade. You can either fund your own account and probably lose thousands of dollars. If you want to get around the PDT rule, they make you have $25,000 in equity to day trade actively, and no new trader has risk management. That's a ton of risk for nothing, right? Instead, this is like a demo account. When people call it scams, it's funny because if you think about it like this, if you were going to buy real-time data in the futures market, it's going to cost about $50, right? And so you get real-time data, and then it's kind of like a souped-up demo account that teaches you how to trade. You learn how to trade under pressure. It gives you some rules, right? Like, you got to have reasonable expectation for it. And the traders that lose here, they would lose so much more if they tried to fund themselves most of the time, at least. And there's always outliers, but the value's certainly there, right? But it's all good. People can believe whatever they want to believe. 4K today. I'm chilling. That's great, man. You know, most day traders lose though. He may say he is biased. I'm definitely top 3 most biased ever in the world. You know, I get paid, so of course I'm biased. You just gotta have reasonable expectations. Like, people think that they're gonna get funded and then they're gonna make all this money. Like, people like to, traders have a big ego and it's hard for them to look at things objectively. Like, if I take I'll put it this way: if I put up $50,000 and I immediately take a $10,000 hit loss, right? I might want to blame anybody else, whomever else I can. You know, I might want to blame my platform. Might want to blame whoever taught me the strategy. I might want to blame the stock. You know, it doesn't matter. I'm trying to blame anybody outside of myself. The reality is I just took a bunch of dumb trades and it's my fault and nobody else's. But it's human nature to want to lash out and blame whomever else you can. Yeah, and I think it's an important thing for traders to understand. Like, you got to be accountable for yourself in trading. Most day traders lose. Data is 10 or 20. Now add a paper account and you're gonna get about the same value. The value's there. I think you know the value's there. But it's subjective, I guess. And so it's all good, bro. It's all good, man. Do you think Bitcoin 150 by the end of the year? I hope so, but it might just be confirmation bias on my end. I hope so, though. I really do. I hope we hit it. Yeah, most day traders lose, right? Like, that's just the truth of it. Almost all day traders lose. And again, I get it. Like, when I got started, I thought I was gonna be like a savant prodigy. I thought I was gonna day trade. I had a little $4,000, and when I went and saw the movie The Big Short, and I loved the movie. You know, wanted to come. I was a poker player prior to that, so I came home and I wanted to learn how to day trade. And eventually, when I thought I had it down, I told my wife, I was like, "Hey, I'm gonna deposit this 4K and try to day trade." Right? And I thought I was going to be a prodigy savant. My wife was like, "Don't do it." And I did it. And I thought I was just going to start making 10K days. Just boom. Everybody's going to be like, "Dang, look at John. He's a day trading savant prodigy." You know? I just ended up losing it in about 2 weeks, 3 weeks or so. And that's why I think funded account programs are important, because people can do the same thing. They can still think they're going to be a prodigy savant, but when they lose, instead of losing 4K, they're losing $50, you know? I think that's a much better thing, but, you know, it's all good. I get it. Listen, I've been trading for years and years, you know, and so I know how it goes. I know the delusions of grandeur that traders have. Every trader knows. And I can poke fun about it because every trader knows what I'm saying, and they've probably experienced it. Congrats, T. Happy for you, man. Congrats. Yeah, you know, again, I don't sell a course. I don't claim to be even a good trader. Like, I always told people I wasn't going to sell a course, and I wasn't even going to claim to be a good trader. Like, I went on Top Step TV, and some people in the comments were like, "Look at this dude trades. Ugh." You know, or they were like, "Why don't you show us your P&L?" And I'm just kind of like, because I'm not an expert. I'm not even claiming to be good. You know how difficult it is to trade in front of hundreds or thousands of people watching you, critiquing everything you do? Incredibly stressful. You know, if I can limit some of that stress by hiding some stuff, you better believe I'm going to hide some stuff and not show you guys everything, because it's super stressful. And hopefully you guys can appreciate the honesty there, because that's the truth, right? Anybody that understands this knows, and maybe at least can understand how stressful it might be. So I'd rather just tell people I'm the worst trader of all time, and if I can outperform that standard, then I'm happy with it, you know. So All right, guys, here we go. We got the Meta earnings call coming out live soon. Meta's still down 577s, 578s. Yeah, the problem is that, like, the real problem is that usually the people who are the most definitive are the newest, rookie-ish traders in the world, right? Like, you see people and say, like, oh, that trade's not gonna work. You know, that's a terrible trade, bro. You should never short there, you know? And then they're just so hypercritical and they're definitive and they act like they know exactly what's gonna happen. And then it goes in my favor. And this happened on the show, and then it just started dropping. The worst short in the world started to perform well, and then it's just kind of silence. It's just kind of crickets. It's the point I made was, like, experienced traders are never definitive in their statements, especially in terms of predictions, because if you've been around the market long enough, you understand nobody freaking knows if anything's going to go up, down, or sideways. Like the quote from the Wolf of Wall Street, absolutely true. Nobody knows if anything's going to go up, down, or sideways short term. Long-term markets are very predictable. But when we're talking about day trading, nobody knows if something's going to go down in the next 10 minutes, 15 minutes. The only thing we can really do is try to play the probabilities. And with that in mind, you can't really critique anybody taking another trade because nobody knows. And the ones that are usually the loudest are usually the newest. It's a Dunning-Kruger effect, you know. Freddy Krueger's brother, you know. So, anyways, guys, we got the Meta earnings call live. Let me switch out my headphones before I forget. Alright, guys. Can y'all hear the music? You should be able to. Let me know. If you can hear the music, you'll probably be able to hear the earnings call, which starts in 3 minutes. MicroStrategy third quarter results came out. Would know. I experience it from a trader on YouTube. Like, dude, you know how many times I enter a position and people are like, that's the worst trade of all time ever. How dare you even think about entering a position there? And I'm like, I'm so sorry. And then it just completely goes in my favor over the next 5 minutes. And, you know, Bill critiquing Bill. That's going to be my new nickname. Bill critiquing Bill just kind of goes silent afterwards. When I'm like, hey, Bill, what happened, dude? Smart people, you know, think before they speak, I think, guys. And I'm coming from the top 3 least smart, most speaking, less thinking persons in the world. All right, guys, we got 2 minutes. Can y'all hear the music? You should be able to hear the music, correct? I just want to make sure. You see it in video? Are we looking at the same NVIDIA, bruh? Wow, crazy NVIDIA chart right here, man. Whoa, dude. Wow. It's moved like 30 cents in the last hour. Shocking. All right, I'm sorry. All right, guys. Yeah, here we go. I'm a huge troll, I'm sorry. Alright, so if y'all could hear... So, listen, so the earnings call starts in about a minute. I'm going to turn the music off. The earnings call starts in about a minute. Let me exit around all this other stuff, too. Y'all hit that subscribe button. Hit the notification bell. I appreciate it. Thanks so much. Let me cut a lot of this. Once the earnings call starts, just tell me in chat if you can hear it. You should be able to hear it. And let me know if the sound is good, essentially, is what I'm asking. It's not out yet. Again, it starts in about 10 seconds. 15 seconds is when it's scheduled to talk. Here, Rosie. Rosie, out. Yeah, the Microsoft call's at 5. We're waiting on the Meta call to start. It should be starting pretty soon. All right, guys, we're waiting on the Meta call. Should be starting pretty soon. They're a little late on starting the call.
My name is Krista, and I will be your conference operator today. At this time, I would like to welcome everyone to the Meta third quarter earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad. To withdraw your question, again, press star 1. We ask that you limit yourself to one question. This call will be recorded. Thank you very much. Kenneth Durrell, Meta's Director of Investor Relations, you may begin.
Thank you. Good afternoon and welcome to Meta Platforms' third quarter 2024 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's earnings press release and in our quarterly report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.fb.com. And now, I'd like to turn the call over to Mark.
All right, thanks, Ken. This was a good quarter with strong product and business momentum, and with parts of our long-term vision around AI and the future of computing coming into sharper focus. We estimate that there are now more than 3.2 billion people using at least one of our apps each day, and we're seeing rapid adoption of Meta AI and Llama, which is quickly becoming a standard across the industry. So let's start with some highlights from the apps. For WhatsApp, the U.S. remains one of our fastest growing countries, and we just passed a milestone of 2 billion calls made globally every day. On Facebook, we continue to see positive trends with young adults, especially in the We also launched teen accounts this quarter, which add built-in protections that limit who teens are messaging and what content they can see. On Threads, it's been growing more than 1 million signups per day. Engagement is growing too, so we continue to be on track towards this becoming our progress with our AI efforts too. And we're seeing AI have a positive impact on nearly all aspects of our work, from our core business engagement and monetization to our long-term roadmaps for new services and computing platforms. And I think that this partially comes from having a vision and roadmap that is aligned with from our teams doing some really excellent work on execution on so many fronts. Meta AI improvements to our AI-driven feed and video recommendations have led to an 8% increase this year alone. More than 1 million advertisers used our Gen AI tools to create more than 15 million ads in the last month. A 7% increase in conversions, and we believe that there's a lot more upside here.
Yeah, this is on.
We are also seeing great momentum this year, and the more widely that Llama gets adopted and becomes the industry standard, the more that the improvements to its quality and efficiency. We released Llama 3.2, including the leading small models that run on device and open source multimodal models. Now, we're also working with the public sector to adopt Llama across the US government. The Llama 3 models I'm even more excited about Llama 4, which is now well into its development. We're training the Llama 4 models on a cluster that is bigger than 100,000 H100s or bigger than anything that I've seen reported for what others are doing. I expect that the smaller Llama 4 models will be ready first. And I think that they're going to be a big deal on several fronts: new modalities, capabilities, stronger reasoning, and much faster. It seems pretty clear to me that open source will be the most cost-effective, customizable, trustworthy, performant, and easiest to use option that is available to developers. All right, now, it's the time of the year at Meta when we plan our budget for the next year, and that's still in progress, but I wanted to share a few things that have stood out to me as we've gone through this process so far. First, it's clear that there are a lot of new opportunities to use new AI advances to accelerate our core business that should have strong ROI over the next few years, so I think we should invest more there. And second, our AI investments continue to require serious infrastructure, and I expect to continue investing significantly there too. We haven't decided on a final budget yet, but those are some of the directional trends that I'm seeing. Now, moving on, this quarter, we also had several milestones around Reality Labs and the integration of AI and wearables. Ray-Ban Meta glasses are the prime example here. They're great-looking glasses that let you take photos and videos, listen to music, and take calls. But what makes them really special is the Meta AI integration. With our new updates, it'll be able to not only answer your questions throughout the day, but also help you remember things, give you suggestions as you're doing things using real-time multimodal AI, and even translate other languages right in your ear for you. I continue to think that glasses are the ideal form factor for AI because you can let your AI see what you see, hear what you hear, and talk to you. Demand for the glasses continues to be very strong. The new Clear edition that we released at Connect sold out almost immediately and has been trading online for over $1,000. We've deepened our partnership with EssilorLuxottica to build future generations of smart eyewear that deliver both cutting-edge technology and style. At Connect, we also showed Orion, our first full holographic AR glasses. We've been working on this one for about a decade, and it gives you a sense of where this is all going. We're not too far off from being able to deliver great-looking glasses that let you seamlessly blend the physical and digital worlds so you can feel present with anyone, no matter where they are. And we're starting to see the next computing platform come together, and it's pretty exciting. All right. We also released our newest mixed reality headset, Quest 3S. It brings the best capabilities of Quest 3, high-quality color pass-through, a new chipset, and more at the much more accessible price point of $300. Reviews are great so far, and I'm looking forward to seeing how well it does this holiday season as more people get their hands on it. So overall, this has been a good quarter. I'm pretty amped about all the work that we're doing right now. This may be the most dynamic moment that I've seen in our industry, and I am focused on making sure that we build some awesome things and make the most of the opportunities ahead. And if we do this well, then the potential for Meta and everyone building with us will be massive. As always, I'm grateful for everyone who is on this journey with us, our teams, our partners, and our investors. And now, here's Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis, unless otherwise noted. Q3 total revenue was $40.6 billion, up 19% or 20% on a constant currency basis. Q3 total expenses were $23.2 billion, up 14% compared to last year. In terms of the specific line items, cost of revenue increased 19%, driven primarily by higher infrastructure costs. R&D increased 21%, mostly driven by higher headcount-related expenses and infrastructure costs. Marketing and sales decreased 2%, driven primarily by lower restructuring costs. G&A decreased 10%, driven primarily by lower legal-related expenses. We ended the third quarter with over 72,400 employees, up 9% year over year, with growth primarily driven by hiring in our priority areas of monetization, infrastructure, Reality Labs, generative AI, as well as regulation and compliance. Third quarter operating income was $17.4 billion, representing a 43% operating margin. Our tax rate for the quarter was 12%. Net income was $15.7 billion, or $6.03 per share. Capital expenditures, including principal payments on finance leases, were $9.2 billion, driven by investments in servers, data centers, and network infrastructure. Our capital expenditures were impacted in part by the timing of third quarter server deliveries, which will be paid for in the fourth quarter. Free cash flow was $15.5 billion. In Q3, we completed a debt offering of $10.5 billion, repurchased $8.9 billion of our Class A common stock, and paid $1.3 billion in dividends to shareholders, ending the quarter with $70.9 billion in cash and marketable securities and $28.8 billion in debt. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow, with more than 3.2 billion people using at least one of our Family of Apps on a daily basis in September. Q3 total Family of Apps revenue was $40.3 billion, up 19% year over year, up 19% or 20% on a constant currency basis. Within ad revenue, the online commerce, healthcare, and entertainment and media. On a user geography basis, ad revenue growth was strongest in rest of world. Asia Pacific grew 18%, and North America grew 16%. On an advertiser, America and Europe at 21%. Rest of world was up 17%, while Asia Pacific was the slowest growing region at 15%, decelerating from our second quarter growth rate of 28% due mainly to lapping a period of stronger demand from China-based advertisers. In Q3, the total number of ad impressions served across our services increased 7%, and the average price per ad increased 11%. Impression growth was mainly driven by Asia Pacific and rest of world. Pricing growth was driven by increased advertiser demand, in part due to improved ad performance. This was partially offset by impression growth, particularly from lower monetizing regions and surfaces. Family of Apps other revenue was $434 million, up 48%, driven primarily by business. We continue to direct the majority of our investments for the development and operation of our Family of Apps. In Q3, representing approximately 80% of our overall expenses. Family of Apps expenses were up 13% expenses, partially offset by lower legal-related expenses. Family of Apps operating income was 21% operating margin. Within our Reality Labs segment, Q3 revenue was $270 million, up 29%, driven by hardware sales. Reality Labs expenses were $4.7 billion, up 19% year over year, driven primarily by higher headcount-related expenses and infrastructure costs. Reality Labs operating loss was $4.4 billion. Turning now to the business outlook. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. On the first, we are focused on both improving people's experiences within our apps today and investing in longer-term initiatives that have the potential to contribute to engagement in the years ahead. We expect our content recommendations roadmap will span both of these timeframes, as we have nearer-term work streams focused on improving recommendations, as well as multi-year initiatives to develop innovative new approaches. I'll focus first on the near term. In the third quarter, we continued to see daily usage grow year over year across Facebook and Instagram, both globally and in the US. On Facebook, we're seeing strong results from the global rollout of our unified video player in June. Since introducing the new experience and prediction systems that power it, we've seen a 10% increase in time spent within the Facebook video player. This month, we've entered the next phase of Facebook's video product evolution. Starting in the US and Canada, we are updating the standalone video tab to a full-screen viewing experience, which will allow people to seamlessly watch videos in a more immersive experience. We expect to complete this global rollout in early 2025. On Instagram, Reels continues to see good traction, and we're making ongoing progress with our focus on promoting original content, with more than 60% of recommendations now coming from original posts in the US. This is helping people find unique and differentiated content on Instagram while also helping earlier stage creators get discovered. Next, let me talk more about our multi-year roadmap for recommendations. Previously, we operated separate ranking and recommendation systems for each of our products because we found that performance did not scale if we expanded the model size and compute power beyond a certain point. However, inspired by the scaling laws we were observing with our large language models, last year we developed new ranking model architectures capable of learning more effectively from significantly larger datasets. To start, we have been deploying these new architectures to our Facebook video ranking models, which has enabled us to deliver more relevant recommendations and unlock meaningful gains in watch time. Now we're exploring whether these new models can unlock similar improvements to recommendations on other surfaces. After that, we will look to introduce cross-surface data to these models so our systems can learn from what is interesting to someone on one surface of our apps and use it to improve their recommendations on another. This will take time to execute, and there are other explorations that we will pursue in parallel. However, over time, we are optimistic that this will unlock more relevant recommendations while also leading to higher engineering efficiency as we operate a smaller number of recommendations. Beyond recommendations, we're making progress with our other longer-term engagement priorities, including generative AI and threads. Meta AI usage continues to scale as we make it available in more countries and languages. We're seeing lifts in usage as we improve our models and have introduced a number of enhancements in recent months to make Meta AI more helpful and engaging. Last month, we began introducing voice, so you can speak with Meta AI more naturally, and it's now fully available in English to people in the US, Australia, Canada, and New Zealand. In the US, people can now also upload photos to Meta AI to learn more about them, write captions for posts, and add, remove, or change things about their images with a simple text prompt. These are all built with our first multimodal foundation model, Llama 3.2. Threads remains another area where we see exciting potential. We are bringing on an increasing number of new users each quarter, while depth of engagement also continues to grow. Looking ahead, we plan to introduce more features to make it even easier for people to stay up to date on topics they care about. Now to the second driver of our revenue performance, increasing monetization efficiency. There are two parts to this work. The first is optimizing the level of ads within organic engagement. We continue to see opportunities to grow ad supply on lower monetizing surfaces like video. Within Facebook, video engagement continues to shift to short form following the unification of our video player, and we expect this to continue with the transition of the video tab to a full screen format. This is resulting in organic video impressions growing more quickly than overall video time on Facebook, which provides more opportunities to serve ads. Across both Facebook and Instagram, we're also continuing our broader work to optimize when and where we should show ads within a person's session. This is enabling us to drive revenue and conversion growth without increasing the number of ads. The second part of improving monetization efficiency is enhancing marketing performance. Similar to organic content ranking, we are finding opportunities to achieve meaningful ads performance gains by adopting new approaches to modeling. For example, we recently deployed new learning and modeling techniques that enable our ad systems to consider the sequence of actions a person takes before and after seeing an ad. Previously, our ad system could only aggregate those actions together without mapping the sequence. This new approach allows our systems to better anticipate how audiences will respond to specific ads. Since we adopted the new models in the first half of this year, we've already seen a 2 to 4% increase in conversions based on testing within selected segments. We're also evolving our ads platform to ensure that the results we drive are customized to each business's objectives and to the way they measure value. In Q3, we introduced changes to our ads ranking and optimization models to take more of the cross-publisher journey into account, which we expect to increase the meta-attributed conversions that advertisers see in their third-party analytics tools. We're also testing new features and settings for advertisers that will allow them to optimize their campaigns for what they value most, such as driving incremental conversions rather than absolute conversions. Finally, there is continued momentum with our Advantage Plus solutions, including our ad creative tools. We're seeing strong retention with advertisers using our generative AI-powered image expansion, background generation, and text generation tools, and they're already driving improved performance for advertisers even at this early stage. Earlier this month, we began testing our first video generation features, video expansion and image animation. We expect to make them more broadly available by early next year. Next, I'd like to discuss our approach to capital allocation. We continue to take a long-term view in running the business, which involves investing in a portfolio of opportunities that we expect will generate returns over different time periods. We are very optimistic about the set of opportunities in front of us and believe that investing now in both infrastructure and talent will not only accelerate our progress, but increase the likelihood of maximizing returns within each area. This includes investing in both near-term initiatives to deliver continued healthy revenue growth within our core business, as well as longer-term opportunities that have the scale to deliver compelling returns over time. Given the lead time of our longer-term investments, we also continue to maximize our flexibility so that we can react to market developments. Within Reality Labs, this has benefited us as we've evolved our roadmaps to respond to the earlier than expected success of smart glasses. Within generative AI, we expect significantly scaling up our infrastructure capacity now, while also prioritizing its fungibility, will similarly position us well to respond to how the technology and market develop in the years ahead. Moving now to our financial outlook. We expect fourth quarter 2024 total revenue to be in the range of $45 to $48 billion. Our guidance assumes foreign currency is approximately neutral to year-over-year total revenue growth based on current exchange rates. Turning now to the expense outlook. We expect full year 2024 total expenses to be in the range of $96 to $98 billion, updated from our prior range of $96 to $99 billion. For Reality Labs, we continue to expect 2024 operating losses to increase meaningfully year-over-year due to our ongoing product development efforts and investments to further scale our ecosystem. Turning now to the CapEx outlook. We anticipate our full year 2024 capital expenditures will be in the range of $38 to $40 billion, updated from our prior range of $37 to $40 billion. We continue to expect significant capital expenditure growth in 2025. Given this, along with the back-end weighted nature of our 2024 CapEx, we expect a significant acceleration in infrastructure expense growth next year as we recognize higher growth in depreciation and operating expenses of our expanded infrastructure fleet. On to tax. Absent any changes to our tax landscape, we expect our fourth quarter 2024 tax rate to be in the low teens. In addition, we continue to monitor an active regulatory landscape, including the increasing legal and regulatory headwinds in the EU and the US that could significantly impact our business and our financial results. In closing, this was another good quarter for our business. Our global community continues to grow. We're seeing ongoing momentum across our core priorities, and we have exciting opportunities ahead of us to drive further growth in our core business in 2025 and capitalize on the longer-term opportunities ahead. With that, Krista, let's open up the call for questions.
Thank you. We will now open the lines for a question and answer session. To ask a question, please press star one on your touch-tone phone. To withdraw your question, again, press star one. Please limit yourself to one question. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. And your first question comes from Brian Nowak with Morgan Stanley. Please go ahead.
Thanks for taking my questions. I have two, one for Mark and one for Susan. Mark, I wanted to sort of ask you about Meta AI a little bit. Can you help us understand some of the more recurring types of interactions or query types you're seeing with this product and whether they have commercial intent? And then just over time, how do you think about building your own in-house search offering as opposed to partnering and having another player partner those queries? And then Susan, I wanted to ask you about sort of headcount because you talked a lot about sort of infrastructure investment into 25. How do we sort of think about relative headcount investments into 25 to sort of support all that infrastructure versus what you've been doing in 2024? Thanks.
Brian, thanks for the question. This is Susan. So your first question was around what kinds of recurring interactions that we see between people and their usage of Meta AI. And, we're seeing, first of all, I think as Mark mentioned, just we're excited about the progress of Meta AI. It's obviously very early in its journey, but it continues to be on track to be the most used AI assistant in the world by end of year, and it has over 500 million monthly actives. And people are using it for many things. A number of the frequent use cases we're seeing include information gathering, help with how-to tasks, which is the largest use case. But we also see people using it to go deeper on interests, to look for content on our services, for, image generation. That's also been another pretty popular use case so far. And I would say that in the near term, our focus is really on making Meta AI increasingly valuable for people. And if we're successful, we think there will be, a broadening set of queries that people use it for, including more monetizable queries over time. The second part of your question, Meta AI draws from content across the web to address timely questions from users, and it provides sources for those results from our search engine partners. We've integrated with Bing and Google, both of whom offer great search experiences. Like other companies, we also train our Gen AI models on content that is publicly available online, and we crawl the web for a variety of purposes. Your second question was really, I think, around maybe how we're thinking about headcount in 2025. And, we are still working through our budgeting processes for 25. That's in part why we, changed our forward-looking guidance approach to give guidance in the next call. But as we're working through this, we are looking at where there are opportunities for us to invest in our strategic priorities, and that includes monetization, infrastructure, Reality Labs, Gen AI, our ongoing investments in regulation and compliance. And we're really, evaluating each of those opportunities with an eye towards what either the measurable ROI looks like or what the strategic opportunity looks like, depending on what the area is. And we're supporting that by continuing to really focus on streamlining our operations elsewhere. So, we don't have specifics to share about headcount growth in 2025, but that gives you a little bit of the flavor of where we are in the budgeting process.
Your next question comes from the line of Eric Sheridan with Goldman Sachs. Please go ahead.
Thanks so much for taking the question. Maybe just one, building on that question from Brian and going back to Mark's comments about the learnings as you do go through the business planning process. Mark, I wanted to understand better what you continue to learn about what the biggest opportunity sets are to apply AI to when you think about your platform, your product portfolio, and your internal processes, because you sound quite optimistic about key learnings and how they continue to ramp and maybe even accelerate in terms of the potential for return profile. I just want to go a little bit deeper into what your key learnings are as you go through that process. Thank you.
I think the main point here is just that it seems broadly applicable to a very wide variety of products. So there are areas that are more part of our core business, from making feed more relevant and reels more relevant, to making ads more relevant, to helping advertisers generate better ads, to helping people create the content that they want, helping our integrity operations and compliance and the work that we do there. That's important. It's very valuable across all these aspects of the core business, but then it also is going to enable completely new types of services. Like, we didn't have something like Meta AI before. We didn't have something like the Ray-Ban Meta glasses before. And AI is going to be a really important ingredient of all of these things. There are also other new products like that, things around AI Studio. This year we really focused on rolling out Meta AI as kind of our kind of single assistant that people can ask any question to. But I think that there's a lot of opportunities that I think we'll see ramp more over the next year, in terms of both consumer and business use cases for people interacting with a wide variety of different AI agents. Consumer ones with AI Studio around whether it's different creators or kind of different agents that people create for entertainment. Or on the business side, we do want to continue making progress on this vision of making it so that any small business or any business over time can, with a few clicks, stand up an AI agent that can help do customer service and sell things to all of their customers around the world. And I think that that's a huge opportunity. So it's very broad. And I think part of what we're seeing is that there are a lot of opportunities. Some of the longer term ones around Meta AI or AI Studio, those aren't necessarily a next few years massive profit opportunity, but there are a lot of things in the core business around engagement and monetization, which I think will be over the next few years. So I think we're trying to make sure that we get the right people working on this and that we have the right amount of investment that's just going towards what we view as a very, very large opportunity.
Your next question comes from the line of Doug Anmuth with JP Morgan. Please go ahead.
Great. Thanks for taking the questions. Maybe just to follow up first on Meta AI, Mark. Helpful context certainly to understand how people are using the platform today. Maybe you can just talk more about some of that functionality over time as agents are introduced, just how you really expect use cases to expand beyond just longer and more complex queries. And then Susan, on CapEx, just trying to understand your comment on 4Q a little bit more. It sounds like some of the payments pushed into 4Q with the guidance suggesting 15 to 17 billion in CapEx in the quarter. And is that something we should think about as run rate into 2025? Thank you.
Yeah, I can take the Meta AI question, although, I'm sort of intentionally now not saying too much about the new capabilities and modalities that we're launching with Llama 4 that are coming to Meta AI. I noted in the comments up front that there, with each major generational update, I expect that there will be large new capacities that get added. But I think that that's just going to be that's partially what I'm excited about, and we'll talk more about that next year when we're ready to. One of the trends that I do think we're going to see, though, is having the models not just power Meta AI or our single assistant, but across AI Studio and business agents have that grow. This year, if you look back to where we were about a year ago, we were starting to roll out Meta AI. This year, we have really so far succeeded in having that grow and having a lot of people use that. There's obviously a lot more depth of engagement and new use cases that we want to add over time. But I'd say that we're today with AI Studio and Business AI is about where we were with Meta AI about a year ago. So I think in the next year, our goal around that is going to be to try to make those pretty widespread use cases, even though there's going to be a multi-year path to getting kind of the depth of usage and the business results around that we want. So there's a lot to do here, though, and I'm excited to talk about that starting earlier next year.
Thanks, Doug. So your second question was about Q4 CapEx. The expected step up in Q4 CapEx from Q3 is, the part of that comes from increases in server spend and to a lesser extent data center CapEx. But with servers, there are these timing dynamics at play that you referred to because we had these server deliveries that landed late in Q3, and so the cash doesn't go out the door basically till Q4, and that's when you'll see the CapEx show up. And given the nature of capital expenditures generally, there is actually quite a bit of lumpiness quarter to quarter. So it's a little bit hard to sort of extrapolate from any particular quarter. Overall, I'd say we're growing our infrastructure investments, significantly this year, and we expect significant growth again in 2025.
Your next question comes from the line of Justin Post with Bank of America. Please go ahead.
Great. I think I'll ask a cost question this time. Just thinking about use of AI and employee productivity, how are you able to utilize AI internally, and are you seeing big productivity gains in your R&D group? And second, I know I'll go after the headcount one more time, but Susan, how flexible is your headcount as you think about cost growth in other areas? Thanks.
Justin, so I'll take a crack at both of those. On the use of AI and employee productivity, it's certainly something that we're very excited about. I don't know that we have anything particularly quantitative that we're sharing right now. I think there are different efficiency opportunities with AI that we've been focused on in terms of where we can reduce costs over time. And generate savings through, increasing internal productivity in areas like coding. For example, it's early, but we're seeing a lot of adoption internally of our internal assistant and coding agent. And, we continue to make Llama more effective at coding, which should also make this use case increasingly valuable to developers over time. There are also places where, we hope over time that we'll be able to deploy these tools against a lot of our content moderation efforts to help make the big body of content moderation work that we undertake to help it make it more efficient and effective for us to do so. And there are lots of other places around the company where I would say we're relatively early in exploring the way that we can use LLM-based tools to make different types of work streams more efficient. So all that is to say, it's something we're pretty excited about. We have lots of teams focused on it. There are sort of small opportunities in, G&A functions to what we hope will be big opportunities in areas like content moderation and coding productivity over time. On your second question about headcount, we're really, again, we're still mid-budget, so there's, we don't have very much that is definitive to share about this at the time. But as we're evaluating, where there are opportunities for us to make good investments, we really think about there is a bucket of very ROI-driven headcount opportunities. We're very rigorous about the way we, think about returns there and what the return opportunity is and, what we think is the likelihood of those returns and, what is the aggregate incrementality of those investments. And those are all things that sort of we're evaluating when we think about where to invest in the core business and where we think we can deliver sort of ROI on a nearer term basis. And then, at the same time, we're also assessing, what the opportunities look like in some of the more medium and long-term strategic areas of investment, and that includes our efforts, in Gen AI and the infrastructure needed to support it. It includes our investments in Reality Labs. And so, those are all things that we're kind of assessing in kind of a portfolio of what we could, of what we think we would do in 2025. With a couple of thoughts, one is, again, where can we sort of build the most flexibility into the way that, we're thinking about either infrastructure or headcount plans. And the second is we're really focused, across the company, on our efficiency efforts broadly and, making sure that we feel like we're continuing to, push the whole company, including areas in which, we expect that we will be making additional headcount investments to think about how they can be more efficient in 25 than they were in 24.
Your next question comes from the line of Ross Sandler with Barclays. Please go ahead.
Great. Just two quick ones, Mark. You said something along the lines of the more standardized Llama becomes, the more improvements will flow back to the core Meta business. And I guess, could you just dig in a little bit more on that? So the series of Llama models are being used by lots of developers building different things in AI. I guess, how are you using that vantage point to incubate new ideas inside Meta? And then second question is, you mentioned on one of the podcasts after the Meta Connect that assuming scaling laws hold up, we may need hundreds of billions of compute capex to kind of reach our goals around Gen AI. So I guess, how quickly could you conceivably stand up that much infrastructure given, some of the constraints around energy or, custom ASICs or other factors? Just any more color on the speed by which we could get that amount of compute online at Meta. Thank you.
Yeah, I can try to give some more color on this. I mean, the improvements to Llama, I'd say, come in a couple of flavors. There's sort of the quality flavor and the efficiency flavor. There are a lot of researchers and independent developers who do work, and because Llama is available, they do the work on Llama, and they make improvements, and then they publish it, and it's very easy for us to then incorporate that both back into Llama and into our Meta products like Meta AI or AI Studio or Business AIs, because the examples that are being shown are people doing it on our stack. Perhaps more importantly is just the efficiency and cost. I mean, this stuff is obviously very expensive. When someone figures out a way to run this better, if they can run it 20% more effectively, then that will save us a huge amount of money. And that was sort of the experience that we had with Open Compute, and why part of why we are leaning so much into open source here in the first place is that we found counterintuitively with Open Compute that by publishing and sharing the architectures and designs that we had for our compute, the industry standardized around it a bit more. We got some suggestions also that helped us save costs, and that just ended up being really valuable for us. Here, one of the big costs is, chips. A lot of the infrastructure there. What we're seeing is that as Llama gets adopted more, you're seeing folks like NVIDIA and AMD and optimize their chips more to run Llama specifically well, which clearly benefits us. So it benefits everyone who's using Llama, but it makes our products better, right? Rather than if we were just on an island building a model that no one was kind of standardizing around in the industry. So that's some of what we're seeing around Llama, and why I think it's good business for us to do this in an open way. In terms of scaling infra, when I talk about our teams executing well, some of that goes towards delivering more engaging products, and some of it goes towards delivering more revenue. On the infra side, it goes towards building out the expenses faster, right? So I think part of what we're seeing this year is the infra team is executing quite well. And I think that's why over the course of the year, we've been able to build out more capacity. I mean, going into the year, we had a range for what we thought we could potentially do, and we have been able to do, I think, more than I think we'd kind of hoped and expected at the beginning of the year. And while that reflects as higher expenses, it's actually something that I'm quite happy that the team is executing well on. And I think that will so that execution makes me somewhat more optimistic that we're going to be able to keep on building this out at a good pace. but that's part of this whole thing. Is this is this part of the formula around kind of building out the infrastructures is maybe not what investors want to hear in the near term, that we're growing that, but I just think that the opportunities here are really big. We're going to continue investing significantly in this, and I'm proud of the teams that are doing great work to stand up a large amount of capacity, so that way we can deliver world-class models and world-class products.
Your next question comes from the line of Ron Josey with Citi. Please go ahead.
Great. Thanks for taking the question. Maybe a bigger picture one as well, Mark, just this time on Threads. Now one of the core apps and on its way to becoming the next major social app and 275 million MAUs. Wanted to hear your thoughts on how this product evolves over time, specifically, from a monetization perspective, but also, next steps on users. And then, Susan, with pricing up 11% in the quarter, I wanted to hear more about the pricing dynamics on the platform. I think you talked about just pricing increasing due to greater advertising demand and improved ad performance. So help us understand that a little bit more. Thank you.
Thanks, Ron. So, your first question was about Threads. We're making good progress there. We are continuing to launch more features and make improvements to our ranking stack. We feel very good about the continued user growth on Threads. We're bringing on an increasing number of users each quarter, and depth of engagement also continues to grow. And in Q3, we saw, especially strong user growth in key markets like the U.S., Taiwan, and Japan. And we've added a number of new features over the course of Q3, including, account insights for businesses and creators to see how their posts perform, the ability to save multiple drafts, continuing to deliver on our commitment to integrate Threads with the Fediverse, and basically, we're very focused on continuing to build out the sort of functionality of Threads over time and being responsive to what users tell us that they're interested in. Specifically, as it pertains to monetization, we don't expect Threads to be a meaningful driver of 2025 revenue at this time. We've been just pleased with the growth trajectory, and again, are really focused on introducing features that the community finds valuable and working to deepen growth and engagement. Your second question was about the increase in average price per ad. So that grew 11% year over year, driven by, strong advertiser demand. And part of that is because of better ad performance over time also. And we saw that CPM growth accelerate slightly from 10% in Q2, in part because we experienced lower impression growth in Q3. But more broadly, as we think about pricing growth and this metric, the year-over-year growth in reported price per ad, there's a lot that goes into that, including the auction dynamics resulting from fluctuations in impression growth, and one of the things that we feel like we're very focused on is really the input metrics. What are the conversions that we are delivering to advertisers? Are they getting more value over time? The sort of blended reported price per ad is complicated because all of those things get rolled up into it. There are so many different objectives that advertisers are optimizing for. Those objectives have very different values that make them hard to compare on an apples-to-apples basis. But we care a lot about, conversion growth, which continues to grow faster than impression growth. And are we seeing healthy cost per action or cost per conversion trends, which we are. And as long as we continue to get better at driving conversions for advertisers, that should have the effect of lifting CPMs over time because we're delivering more conversions per impression served, and that will result in higher value impressions.
Your next question comes from the line of Ken Gawrelski with Wells Fargo. Please go ahead.
Thanks for the opportunity. I appreciate that. I have a bigger picture kind of like ecosystem question here is when we think, I'm curious, how far do you think we are from seeing a proliferation of third-party AI applications, specifically on the kind of the consumer side? I know we're seeing more and more on the enterprise side, agents and et cetera. But when do we see how far out until we see a proliferation of consumer applications in the AI space? And how do you think about, and how does Meta think of itself as one of those key? It was one of those key application applications in the mobile internet and the desktop internet, but now you're also seemingly an infrastructure player as well. So I'd love to hear your thoughts there. Thank you.
Yeah, I mean, there are a lot of consumer products that we're working on. And with Llama, I would expect that app developers will be able to build a lot of really good things too. I've touched on Meta AI and AI Studio and Business AI a bunch, and I expect those to be important parts of the consumer experience. Another part that I haven't talked about quite as much yet is the opportunity for AI to help people create content that just makes people's feed experiences better. But if you look at the big trends in feeds over the history of the company, it started off as friends, right? So all the updates that were in there were basically from your friends posting things, and then we went into this era where we added in creator content too. Where now a very large percent of the content on Instagram and Facebook is not from your friends. It may not even be from people that you're following directly. It could just be recommended content from creators that we can algorithmically determine is going to be interesting and engaging and valuable to you. And I think we're going to add a whole new category of content, which is AI generated or AI summarized content, or kind of existing content pulled together by AI in some way. And I think that that's going to be just very exciting for Facebook and Instagram and maybe Threads or other kind of feed experiences over time. It's something that we're starting to test different things around this. I don't know if we know exactly what's going to work really well yet. Some things are promising. I don't know that this isn't going to be a big impact on the business in 25 would be my guess. But I think that there is. I have high confidence that over the next several years, this is going to be an important trend and one of the important applications. But you're going to get that. You're going to get Meta AI, AI Studio, Business AIs, and a whole lot of things that developers would do with Llama too.
Your next question comes from the line of Youssef Squali with Truist Securities. Please go ahead.
Yeah, thank you very much. Mark, it appears that Meta AI now crawls the web and provides conversational answers about pretty much anything, including current events. And so with over 10 million advertisers and one of the best ROAS offerings out there in your core business, just wondering if there are any plans to start maybe testing ads on commercial queries and move Meta AI closer to becoming real answer engines for the billions of queries that you guys are already seeing. And then, Susan, one of the biggest areas of pushback we get is around Reality Labs and the ongoing losses there. I think 16 billion last year, probably north of 20 billion this year. The question is, are we getting any closer to peak losses there? Or alternatively, what products do you think have the biggest potential there over the next couple of years? Thanks.
I'm happy to take both of these, Youssef. So your first question was on plans to provide ads on commercial queries. I think I alluded to this maybe in a much earlier question. Right now, we're really focused on making Meta AI, as engaging and valuable a consumer experience as possible. Over time, we think there will be a broadening set of queries that people use it for, and I think that the monetization opportunities, will exist when, over time as we get there. But right now, I would say we are, really focused on the consumer experience above all, and this is sort of a playbook for us, with products that we put out in the world where we really dial in the consumer experience before we focus on what the monetization could look like. The second part of your question is about Reality Labs. We aren't sharing expectations beyond 2024 at this point. And, we are certainly, as we think about the 2025 budgeting process for Reality Labs, we're certainly thinking about where we want to make sure we're putting our sort of focus and energy. We are very excited, again, about the progress that we've seen with our smart glasses, as well as the sort of strong consumer interest in them. And so, we're kind of thinking about where we want to make sure that we are investing appropriately behind the consumer momentum that we see. Overall, I'd say, Reality Labs is, clearly one of our strategic long-term priorities, and we expect it will be an area of significant investment, in as we build out towards the very ambitious product roadmap that we have there.
Krista, we have time for one last question.
Your last question comes from the line of Mark Mahaney with Evercore ISI. Please go ahead.
Let me throw out two questions, please. One, this is a year in which we've had a lot of unusual events that could be driving ad revenue, major elections, and not just the U.S., but Europe and in India, and major sports events like World Cup, and I know there's some other things. Are there any just in thinking about comps for next year and maybe in the future, anything, Susan, you would call out, like how much of an impact there may have come from these 1 in every 4 or 5 year events? And then secondly, could you just talk a little bit more about WhatsApp monetization and where you are with that now? It sounds like that's the business messaging part is really feeding in nicely into other revenue, but help us think about where the monetization levels of WhatsApp are now versus where they can be, 2 or 3 years down the road, how far away we are from optimization. Thank you.
Thanks, Mark. So your first question was about sort of the revenue backdrop in 2024. You mentioned events that occur once every 4 or 5 years, so I imagine we're talking about the Olympics. We historically have not seen meaningful incremental contribution from events like the Olympics. We, believe that was largely the case this year. So, when we think about the Q4 outlook, and when we think about going into next year, we generally expect growth to continue to benefit from the healthy global advertising demand that we've seen. We think that our investments, in improving our ads performance, will continue to accrue benefits to advertisers. But obviously, there's a big range of possible macro backdrops, and that's something that we try to reflect in the range of revenue guidance that we give. So, but I don't know that there are a lot of specific events that we would say had a material sort of idiosyncratic to 2024 type of revenue impact. Your second question, was around WhatsApp monetization and where we are. And, right now, what I would say again is click to message is really, the big focus area for us here. We're seeing continued traction in this area. And in particular, growth in click to WhatsApp ads remain particularly strong. And so, we're continuing to focus both on scaling click to WhatsApp ads in more markets where WhatsApp has strong user adoption, like Brazil, for example. It's obviously earlier in the U.S., but we're seeing good growth in click to WhatsApp ads and are continuing to invest in scaling in consumer adoption of WhatsApp in the U.S. also, which will create bigger opportunities down the line. So, and then, of course, a lot of work that we're doing to make the click-to-messaging ads more effective and, helping to focus for the particular, helping advertisers optimize, for the particular conversion events that they care about. The other element of revenue on WhatsApp, I would say, is paid messaging. That continues to grow at a strong pace again. This quarter remains, in fact, the primary driver of growth in our family of apps other revenue line, which was up 48% in Q3. And we're seeing generally a strong increase in the volume of paid conversations, driven both by growth in the number of businesses adopting paid messaging, as well as in the conversational volume per business.
Great. Thank you for joining us today. We appreciate your time, and we look forward to speaking with you again soon.
All right, guys. So that is it for the Meta earnings call. Let me know what you guys think. We're currently at 575. The Microsoft call is currently going on right now. We can take a look at the Microsoft call here. Microsoft's still looking weak, down to 428. Both of them, BDPS, beat revenue, still having a pretty bad reaction on all of these stocks. So again, we'll see what happens. I'll see you guys tomorrow. Tomorrow is an absolutely huge day. We've got inflation data coming out tomorrow. Big inflation data report. PCE inflation data drops live tomorrow. We cover it faster than everybody else. We'll have thousands of people here watching that report when it goes live tomorrow. We also have jobless claims, PCE. Non-farm payrolls are Friday, but we got PCE, jobless claims, Chicago PMI, a bunch of stuff dropping live tomorrow. If you haven't already, Yeah, if you want to day trade with me, try Top Step X. Top Step X is the best platform in the futures market. If you want to day trade futures. Futures market, no PDT rule. The funded account programs are allowed, so you can get your feet wet without risking too much. And most day traders lose. You risk 5K, you're probably going to lose 5K in day trading. And so try a funded account program first. Top Step's the most legit in the world. They give you a demo, test your skill. If you pass it, they fund you. If you fail it, you only lose the monthly subscription. In this case, it's $50 for the base one. If you pass it, you get 50K in funding. In the futures market, there's no PDT rule. You could day trade short, buy market, sell market, very similar to day trading stocks. And if you pass it, you get 50K in funding. They paid out over $100 million to their traders. Patterns are super similar to blue chip stocks. You can day trade the S&P, the NASDAQ, the Russell, gold. Most day traders lose. 90% split once you're funded. Just a lot of cool stuff and zero commissions on Top Step X. So if you sign up to Top Step X, zero commission. They're a sponsor of mine. I'm biased. They pay me money. And so I'm biased in their favor, of course. But check them out. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. Don't copy me. I'm not an investment professional. And I'll be back tomorrow morning bright and early for PCE inflation data and jobless claims unemployment. It's a big day. We'll see you guys then. I love y'all. Y'all have a great day.